else that's out there in a minute. I
Right.
love the idea of hitting the soft loss first, which is the relationship with the tenant. I had this conversation with this really interesting fellow, and I love having conversations with people who have a very different opinion than I do. And this person was talking about, the idea that the relationship. He asked me, he said, "Do you think it is a zero sum game in the relationship between a landlord and the tenant?" And I had to think about that for a minute, and I thought, I don't think so, because
I don't.
the thing is when you look at the tenant will only exist if there's landlords. Otherwise, there's nothing to rent.
And vice versa.
And then the reverse reply. So they both rely on each other to exist. So that in itself is that mutual relationship between them means that there's something that has to happen to make that relationship good. Now, the relationship could be parasitic, or the relationship could be something where it is beneficial for both parties. And I think it's up to the landlord to really be, because they're at the position of elevation. Welcome back to the Money, Mindset, and Mentoring podcast. We are super excited to have our guest today here, Ed Matthews. He is the owner of Clark Street Capital. And Ed does an amazing business of going into neighborhoods and grabbing the nastiest, the dirtiest, the most messed up multi-residential property and turning that thing into a thing of beauty. So, Ed, welcome to the show.
Thanks, Steve. Good to see you, my friend.
Beautiful. Well, thank you for coming on. Tell me a little bit about your background. How did you get into this business?
So I would love to tell you this unique story about how I got into real estate. I read the Purple Bible and Rich Dad, Poor Dad in 2008. I was mid-career in a Silicon Valley. I was slinging software and services all over the country and in a couple cases all over the world. And running around with my hair on fire. And I did that for about 24 years. In 2008, a very good friend of mine gave me the book, and I consumed it in like an afternoon and a full day. Just chewed right through it on a plane ride, and fundamentally changed the way I looked at my future, whatever was coming next. Problem is, it took me 3 years to get the courage to actually pull the trigger on something. But I bought my first place in 2011 and did that for, I would get a bonus or a commission and or flip a house or two, collect that capital, buy another multi, and rinse and repeat. We did that for about 7 years. And in 2018, I realized that I'd had enough of traveling. I didn't want to travel 150 nights a year anymore. And because I have a wife who I adore, and I'm pretty sure she still liked me and still likes me today, as do my two girls. And I wanted to make sure that continued. So we went full time, and I've been doing this since February. It's actually 6 years.
That's amazing.
In a couple of weeks, it'll be 6 years.
Yeah, I'm pretty convinced that at some point, at some time, as you're bopping around the States, slugging the software, that we would have bumped into each other at an airport somewhere.
There's no way we didn't bump into each other at O'Hare or DFW or something, right? Because I was there every week.
Especially because I think, as you had mentioned, you're a fairly tall fellow.
Yeah, I'm hard to miss. I don't blend.
Now, when you get into the multi-res, how many units or how many properties are you currently running with, and what sort of market?
So you're catching me at a kind of a cool inflection point. At our top, we had just short of 200 units. Mm-hmm. Right now, we probably have just short of 80. Mm-hmm. And I am in the process of selling pretty much everything we own here in Connecticut, with the intent of doing two things. One, we're launching a fund, and two, I'm trading up. So, we're selling off all the 4s and 8s and 10s and 15s. And my goal is to buy 500 units this year, 125 units a quarter in 2024.
So going from 200 down to 80, down to 0, and then up to 500 by the end of this year.
Yes. It sounds crazy, but we're about a year or so into executing that plan, and so far so good.
So if you know the book behind me, it says the 10X rule book. So it actually doesn't sound crazy to me. It sounds right in alignment with what that book says.
Well, I'm glad you and Grant agree. That edifies me. So let's go.
There you go, man. Let's do it. Let's do it. So when you look at the class that you work with, and we talk about the
Yeah.
strategy that you're using of rehab to create some value and that sort of thing,
Right.
what kind of got you over the fear factor of, holy crap, I'm over my head. I walked into this place where things are falling to pieces, to the idea that this is exactly the model that I need to follow.
Uh, there are days, to even these days, that when I walk in and go, "What have I done?" But I think the flipping experience helped me a lot. We've been working with the same, two or three crews of guys, and in two cases, two of the crews I've known them since childhood. Right, I grew up
Oh,
with them,
wow.
so I know them, I trust them, I understand the way they think, they understand the way we think, I think, and so we have fixed so many crappy apartment buildings and just completely dilapidated single family homes that, short of functional obsolescence, which I tend to stay away from, there really isn't much that scares me these days. I still steer clear of the major foundation issues, but other than that, I'm we're game. I'll bring my buddy Eric in and we'll walk the property, and I'll go, now I'm the glass half full kind of guy, and Eric is kind of the glass half empty kind of guy, and I'll be, look, this isn't that bad, and that's when he says it's atrocious, but we can fix it. It's okay, right? And so it's a nice yin and yang, and it's worked really well for quite some time now. So, and it's fun.
Oh, it is totally fun. I mean, for me,
Yeah.
we buy the smaller ones still. We went through a rapid transfer of wealth out of our business in 2014, where I had to recover quite heavily. And then we used real estate actually in the same sort of concept to make that recovery successful. And again, it was finding the place that really required a lot of love.
Yeah.
Maybe it was just in the hands of somebody that just, couldn't manage it or didn't want to manage it. And then really taking that thing and making it beautiful.
Indeed. Yeah. No, it's, I find that with, some of these properties, there's so many problems that it eliminates some competition as well, which I find strategically very helpful.
Yeah. Yeah. Now, when you talk about functional obsolescence, are we talking about that, say, for example, the power to the building is underserviced and it's too large to make that switch? Or what are we talking about, the major things you're looking for that? Because I'm curious as to what your topics, your no-goes are.
I look at layout. So if you have to walk through a bedroom to get to the bathroom,
Yep.
That's kind of okay, can we reconfigure that? If we can, great. If we can't, then that's going to be a hard apartment layout to rent for, a couple or a family, right? So
Yeah.
we tend to avoid those. As far as if there are egress problems that would require us to get really into the structure of the building, we probably avoid those as well, because the egress rules here have changed substantially over the last 15, 20 years. So.
Yeah, I think the idea of, and I agree with you on the layouts, that's one of the things when we buy properties, is we go through and try to change the layouts so that they become actually functional. Like there's nothing worse than where the kitchen has no access to an outside or something like that.
Right.
And where the bathroom's in this weird location, or, any of these things where there's no fluidity to the living space, and it's just not congruent with modern lifestyle. And I think, if it can be done in a relatively low cost without much in structure, then, just a couple of non-bearing walls, it's really easy. And we've gone through and blown out bearing walls and, dropped, big, huge concrete walls to try to create open living spaces.
Yeah.
It's a lot of work.
But it's worth it, right? I mean, we've made cathedral ceilings in, the top level of apartment buildings to make it, even more saleable. And we changed the engineering of the building to do it in a couple of cases. But, I mean, we have a couple of structural engineers who are absolute geniuses, and we'll walk them through, and I'll be like, what if we did this? And Eric will pitch a fit, and then I'll say, okay, well, let's go with the guy I'm curious about the person who actually went to engineering school.
Yep.
What does he say?
Yep.
And, in some cases they're like, all right, here are the 12 things you have to do to make it safe. And, we'll go over it. And if it makes sense financially, then we'll do
Yeah, one of the things that I realized when I was going through structure that I never learned last year was
it.
when you move a staircase to an exterior wall, the amount of structure that has to change in
Yes.
that wall. I never knew. I was
Right.
just like, it's just an outside wall. And they're like, then they'd go through and
No, no.
describe everything that needs to happen.
Right.
And we
Because
still ended up
it's
doing it. It just, you do it, you realize that your staircase that was supposed to be 48 inches is now going to be 46 inches
right.
because you're giving it more space to
And you
structure.
have to replace the center. From an engineering perspective, you have to replace all the support from the center for the center of the building that staircase was
Used to
also
do. Yeah, exactly.
right.
Yeah. Yeah, no, I love following the structure and talking to the designs. It's just, I think one of those things, and I think you probably have it in you a little bit, if not a lot, is just, just the sense of accomplishment that you get out of running those kind of projects and seeing what they've gone from and just going through and reminiscing over those I hope you take photos along
Yes,
the
we do.
process. Yeah.
Yeah. Yeah. We didn't for a while, and I regret it because we had some really interesting projects that we did that I have the afters and I have the realtor, the pictures from when we bought the place, but nothing in between. So I
Oh,
regret. Yeah, it's a bummer. And there are several of those, but it is what it is. We got
it's
smarter over the years.
it's usually when you're trying to think about taking those pictures is exactly when you're going through the most stressful part of the project. And,
Right.
and the last thing you're thinking about is taking a picture. You're just like, will the
Yeah.
plumber please show up, or will the
Right.
city please pass this one variance or whatever else it
Right.
is, right?
Exactly. Yeah, that's usually exactly when I'm on bended knee at the building department saying, "Please send your inspector out." I have guys that are, they show up, they eat lunch, they go home.
Yeah,
So
yeah,
please stop
exactly,
that.
exactly. And so
So
what's on the future horizon for you when you look at you've got, you're obviously doing a huge pivot. Now, I think I remember mentioning you were looking at some different markets as well.
we are,
Uh,
yeah. So here in Connecticut, it tends to be much smaller properties. And in fact, when I originally looked at Connecticut, and I live in Connecticut, so uh, one of the things that helped with our whole mantra around we buy crappy apartment buildings from landlords and who aren't really good at their jobs, and we go in and make them clean and safe. A huge piece of that was I knew that I could touch that building. I live almost directly in the center of the state. So if I had to go northeast, south, or west, I could be there in an hour. Right. And
mm,
so that was, so that was interesting. So I was more willing to take on, much more unloved projects, so to speak,
mm,
buildings that needed a lot more work because I could be there and I could keep an eye on it. So that was kind of converting C minus buildings into C plus B minus buildings in a lot of cases. And, now that we're looking outside of Connecticut, the major reason for that is there are very few large apartment complexes in Connecticut. If I want to go buy 125 units in Connecticut, I have to go buy 10 buildings.
yeah,
And that's a lot of moving parts for a small company. That's a lot of moving parts for any company. But looking at North Carolina, looking at Kentucky, looking at Indiana, where we can find a 40, 50, 60, 100 unit building that meets our criteria, our buy box, our criteria, and allows us to do the same things that we do. I would much rather focus on one or two projects a quarter and do them well, as opposed to trying to spread out our team and get 10 projects done and be really stressed out. And, some of those people probably won't end up being my friends after the, start of the next quarter. So, and I'd like to avoid that.
when
But
they're sitting in traffic, not at the job.
yeah, there's a lot of that.
Yeah,
That was my day today, as a matter of fact.
yeah,
I visited 6 buildings in the last 4.5 hours, and I try to walk every building every month, right?
yeah.
And just to make sure. And so where before we were converting C minus C buildings into B minus B buildings, now we're probably looking at C plus through B plus buildings. And it'll be a lot of construction, more remodeling, and upgrades.
Mm-hmm.
So whenever we acquire a building, first first kind of three moves are make it clean and safe, start to rehabilitate the relationship with the residents and figure out, who we can get back on the same page with and who's probably not going to stick around, so that then the third step is upgrading the common areas and any open units to our standards. And so that means, anything from new paint to new flooring to new lighting to emergency exit signs and security and new kitchens and new bathrooms and basically new everything. And so the object is, yes, we want to make it more valuable, but really the thing I want to prove to the residents as we're rebuilding the relationship is there's a new sheriff in town. We actually care. And, our job here is to serve the residents so that they stay a really long time, because kind of the main pillar of our business model is avoiding vacancy. And we've gotten really good at it. So, we go in, we make the buildings clean and safe, and as quickly as possible, make it a place where, folks can be proud to live there. So they stay, on average, they stay a little bit more than 4 years, which is almost 3 times, a little bit short of 3 times the average here in Connecticut. Mm-hmm. And, it makes our buildings a lot more valuable because we don't have to spend money on lease ups and turns and all the other things that my peers do on an annual or 18-month cycle.
Yeah. And now you talked a little bit about a box. I think you talked about you had
buy box. Yeah.
A buy box. I love the term. It obviously has some stuff in it. Yep. Nobody's going to talk about an empty box. So what are the things that are in your buy box?
So one of the key ways that we create deal flow is we're very specific and crystal clear on our criteria and how we buy. And so I provide that to all of the brokers that we target, we want to do business with. We share it with wholesalers to a certain extent, although there's very few wholesalers in the strata where we kind of play, but there are a few. And even property owners to a certain extent. And so very specifically, we're looking for 25 units and above. These days, we're looking for vintage 1980 and above. So that eliminates things like lead paint, lead pipes, things like that. We look for vacancy or occupancy levels of at least 65%, so that I know that the building is somewhat operating. One of the calculations we go through when we're evaluating and underwriting is what's our break-even point, and at what point should we be looking at an operating profit. And 65% in that 65, 70, 75, 80, even 85%, is a management issue. And so management issues are things that we're really good at. And so they're easily fixed and far more easy to fix than, taking a hammer and a paintbrush and scaffolding and siding and all that to a building. We can affect change within a matter of days or weeks when it's a management problem. And that, allows us to really do a good job of repairing the relationship, taking a huge step forward to fix the community, and then start to grow that community back so that, the buildings become cash flow positive as soon as possible. We'll also take on common area and unit upgrades as well. Probably not as aggressive with regard to how we're a little more selective on how far gone we're willing to acquire a building when it's in North Carolina as opposed to Connecticut. But basically the buy box is those 3 states, North Carolina, Indiana, Kentucky, 25 units or more. We look for the occupancy rates. And then it comes down to our investment criteria, where we need to be able to, from a cash flow perspective, very quickly be able to afford a 6 to 8% preferred return for our investors. And as quickly as possible, get it to 12 to 16 plus % annual return, so that they become worthwhile. And it becomes interesting to our group of investors, and they decide to, deploy their hard-earned money with a project like that, as opposed to sticking in the stock market or going buy an art or whatever else they do with it.
Anything else that's out there. I
Right.
love the idea of hitting the soft loss first, which is the relationship with the tenant. I had this
Yeah.
conversation with this really interesting fellow, and I love having conversations with people who have a very different opinion than I do. And this person was talking about, the idea that the relationship. He asked me, he said, "Do you think it is a zero sum game in the relationship between a landlord and the tenant?" And I had to think about that for a minute, and I thought, I don't think so, because
I don't.
the thing is when you look at the tenant will only exist if there's landlords. Otherwise, there's nothing to
Right.
rent.
And vice versa.
And then the reverse reply. So they both rely on each other to exist. So right, that in itself is that mutual relationship between them means that there's something that has to happen to make that relationship good. Now the relationship could be parasitic, or the relationship could be something where it is beneficial for both parties. And I
Right.
think it's up to the landlord to really be, because they're at the position of elevation. It's up to the landlord to create that environment, the landscape, so that the tenant can say, you know what, I feel comfortable enough that we're going to be working together now
Exactly.
to create this ecosystem for success. Because if they're there and they're living there for 3, 5, 7 years, they're building a life. And that
Yeah.
means their friends are coming over, their family's coming over, and they want them to come to a place. If they're in a situation that obviously they're thinking healthy, they want them to come to a place that they can be proud of. And
Right.
so if the landlord provides an environment where the common elements are looked after, garbage is cleaned up,
Yep.
and when I talk about, garbage, we're looking at, anything that's unsafe, anything that's just visually unappealing. And then unfortunately, any of the tenants that maybe are a disturbance might be something that also needs to be removed to make that as a
Correct.
place that they want to invite people over.
Yeah.
Because if they don't feel safe because the other tenants there are making them feel unsafe, that again, it's going to hurt the relationship with the landlord. So I think
Yeah.
you hitting those soft costs and saying that this is our expertise, you have a very quick win right there. And that's not a win that just sits on the P&L, because obviously it's going to allow you to recover higher degrees of rent, but it's also going to be put you in a situation that it's going to create stability. You're going to have people that are proud, and proud people will look after the things that they have.
I sleep well at night. They pay, our residents on average pay their bills on time. They take very good care of the buildings.
Yeah.
If there is a resident that doesn't quite toe the line in terms of, keeping the common areas nice and clean and all that, they self-police in a lot of cases, which is a good and a bad thing. Sometimes that is helpful. Hey, you can't leave your bike out in the hall. Other times it's, Ed, I need you at this building because we've got a human problem.
Mm-hmm.
And the way that we handle that is we're crystal clear about the way that we operate and the rules, and we're responsive. I think the people that live in our buildings, they're good, hardworking people, and in most cases, they're working 1, 2, sometimes 3+ jobs to make it all work. And I respect the hell out of that because I grew up in that family.
Mm-hmm.
And I know, being the child of that type of parent, how hard it is. And so, I think my job and our job collectively is to, I don't want to treat them as tenants. I hope you've picked up, I call them residents, and we call them
I
residents for a
love that.
reason.
Yeah.
It is not I've had more than one landlord, and I will only stand on this soapbox for a few seconds, but I've had so many of my peers here say, being a landlord is a dominance play. You have to establish dominance within your communities, and I completely reject that. Right. And that's coming from a guy. I'm 6'4", 6'5", and block the sun big. If I want to be intimidating, I can be. I just tend not to be. And I'm happier when I'm not. But the fact is that people want to be heard. That's it.
Mm-hmm.
If there's a problem and they get on our system and they say, hey, we need help, they get a response immediately. We communicate with them as to when we're going to be able to get to that. Hey, we've got a crew coming on Friday. They'll take care of that, broken towel rack when we're on site. No, we're not going to come out there just for your broken towel rack, but if you can wait 48 hours, we'll be there and it will be fixed and it'll be perfect. To blood, flood, or fire, which requires me to be on site as soon as humanly possible. I had one today. It's one of the reasons I was out there was I got a phone call this morning from one of our residents. My team got a phone call. Hey, we hear water running, but there's no one in the apartment below us, so something's up. And so we were out there. Turns out we had a burst pipe. And one of our construction guys forgot to turn the heat on when he left from painting the unit that he was painting on, I assume, Monday or Tuesday. And, turns out here in Connecticut, it gets cold, as it probably does up in your neck of the woods. And sometimes that cold turns into ice, and sometimes that ice fills a pipe and bursts it, which had happened today.
Yeah, that's tough.
That's okay. Part of the game. But,
Yep.
there's systems we have in place in terms of the technology we use to make sure that stuff doesn't happen on a regular basis. But unfortunately, this is one of the units that in a building we just acquired, and we're in the process of rehabbing, and we hadn't gotten to that part yet. So say lovey.
Yeah, that's fun.
But the thing is that
it's
the
interesting.
human being
There's a lot of technology that comes out
Yeah.
that I think is going to change the way that buildings are managed. You see those flood things where they see if the water is abnormally performing, and so it can tell you what's going on, or
which
if
we
the
install.
towers are normally juicing, or any of these things that can kind of tell you what's going on and give you some advanced notice. I think those things are superhuman.
And the thermostats we install won't go below a certain temperature, so that we know that the building will always be a minimum of 65 degrees. And if the residents want it warmer, go ahead, crank it up. But that way I know that once we get those thermostats installed, that we don't have to worry about pipes bursting. So lesson learned.
Now let's talk a little bit about, I remember the one thing you were talking about, we were chatting earlier, is about building your community and building the community of people who is going to be your tribe. Talk to me a little bit about that. And what does that look like?
So in terms of the buildings, here's what I know about any building that we own anywhere in the country. My next set of residents live within about 1.5 miles of that building. And so buildings have brands. Sometimes they're good, sometimes they're not so good, and most of them are in between. And if you don't believe me, go on Yelp and check it out. The fact is that we are acquiring those buildings that have been poorly managed on one level or another, and we're going in and fixing them. And we want one of the reasons that we want our residents to be proud of where they live is because most likely their friends live in that same circle. And in a lot of cases, as units come open, it's their cousin, their friend, their aunt, their brother, who is interested in the building. Or even if it's not the exact building, we probably own a building in the area that we also manage. And so when you create that brand of, hey, these guys are good at what they do, they actually care, they're responsive, and they do what they say they're going to do, that spreads. And so, again, the major pillar in our business model is managing vacancy. So if I can keep my vacancy on any particular building under 5%, we're winning. That is a really good business, and it serves our investors well. It serves our company well. It puts capital in our pockets so that we can reinvest in the buildings and make them even more valuable, add amenities, whatever.
Now let's talk about you're talking about all the building of the businesses, or so the buildings. You're building now a sort of a digital asset, which is the fund. So now we're working in a space that, how does that feel? How's that process going?
It's absolutely terrifying. No, it's it's a hole in the market in that, I think that there are banks who are really looking for well experienced investors with pristine credit and operating experience and all that. And when you're looking at me in circa 2010, I wasn't that guy. I had good credit. I had management experience. Did I know what I was doing with regard to investing in properties? No, not at all. Other than the books that I read, I was a theorist at best. And the only way you get practical experience is by doing. And so the fund is a good way for me and my partner, Mike Meyer, who's been in the mortgage and banking business for decades, to kind of bring together our skills where I can look at a project, I can look at the numbers of the project, but also the project plan and be able to tell fairly quickly once I walk a property if it's a realistic plan. And so we're going to use that to kind of guide these investors to kind of set them up for success. Mike obviously knows the operational piece of running a finance business, so he'll handle the servicing of the loans and all that. But what it does is it gives our investors a very predictable, consistent return. It's not a blockbuster return, and I can't really talk specifics yet because the lawyers won't let me. But the bottom line is that it'll be live in a couple. This is, we're recording this in mid-January, and it'll be live February 1st. So the fact is that it provides a predictable, consistent return for our investors. It provides a platform to help early stage, not brand new, but early stage investors get going. It allows us to leverage our experience to help them. And, quite frankly, I also see some of those people as potential partners in the future. So it also starts to fill our community with folks that we would love to do business with as they grow and get bigger and better at what they do.
Now, when you're looking at the which class are you building that fund around? What is your?
So early stage, it'll be small projects. So small is a relative term, but it'll be single family homes that are flips, BRRRRs, properties that people will buy, rehab, refinance, and then rent out. And then the others would be small multi, so 1 to 4 units. We're going to keep it, very manageable, and then grow it from there. But and it's also, that's the market where we live here in Connecticut. That is a 90+% of the deals that happen in the state of Connecticut happen in that little box. Yeah. So
now that's adjacent to the stuff that you're doing with the big multi.
Correct.
Yeah. Yeah. So you got a two-pronged approach.
Correct. Yeah. So nice. I'm out big game hunting with the much larger projects. Those tend to be joint ventures and syndicates. And then the fund is more for, it's an arbitrage play to be. And so, we will give a preferred return. We'll lend out at, 3 to 5 points more than we're paying out. And then we'll also charge points up front to run the operation itself. And, when there's extra money, we'll distribute to the investors and everybody wins.
That sounds like an amazing thing. So when people want to get in on that, what's the next steps? What would they do to connect with you?
So best thing to do would be to hop on our website at clarkst.com. We have an investors page. If you are interested in that, there's a Calendly link that will put you right direct on my calendar, and I'm happy to lay out any of the projects that we have in the pipeline that I'm allowed to talk about. And I can even give previews of the ones that I can't quite give details yet, but I can tell you that they're coming.
Beautiful. Well, Ed, I've got such a passion for what you're doing. I know for us, it made such a huge difference in our position in wealth and getting us out of a very difficult time. Using real estate to really grow and amplify has just been such an amazing thing. And then, the second thing, which gives me and both myself and my wife, huge, I guess, lovey-dovey, touchy-feelies, is it we're creating homes, we're creating homes for people. And
100%.
And the idea that they can go home and they can be proud of the place that they live, there's something to be said about that. And that just brings me true joy.
It's me too. It's one of the things. So my 2 daughters are not at all interested in this business. One wants to be a physical therapist. Another one wants to be work for the FBI. So I didn't raise real estate investors, much to my chagrin, but that's okay. Yeah, you never know. But the thing is that I do take them around to see the buildings, and it's very gratifying that they see how we manage these buildings and how we treat our residents, and the fact that we do a good job. So
Well, they're both going into industries of service. So,
that's true.
there's something to be said about, you taught them about the idea of service and giving. So I think
Yeah.
that's commendable.
Thank you. I blame their mother.
Well, Ed, it's definitely been a pleasure, guys. This is the Money Mindset and Mentoring Podcast. Thanks for tuning in. We will catch you on the next one. Thank you so much, Ed. Appreciate you.
My pleasure.